Well, I think the economy is robust right now, and that's why the Fed should be patient and be in an easing frame of mind.
You believe they should be cutting rates?
No, I'm speaking tongue in cheek.
I thought so, because I'm like, wait a minute, I follow you on Twitter, I read your stuff.
Well, that's the thing.
There's
It's
no
like,
way you believe they should be cutting.
There's this narrative that everything is so awesome that the Fed should be easing policy. It's the most hypocritical thing I've ever heard, but that is the narrative.
I think the narrative I would be concerned about is when you've got Kudlow coming out and you've got some of the Fed nominees like Stephen Moore coming out. I'm thinking either A, they're just trying to please the president, or B, they know something we don't that we need to be worried about.
Look, change happens fast, and people don't understand that. When it is the best of times, that is typically when economies are at inflection points. It's just the way history works. But the working assumption right now is that the Fed has outlawed the business cycle, that we will never go into recession. These are very dangerous ways of thinking. If you look in the weeds, which I do all the time, if you look, for example, at the Chicago PMI, which disappointed, and it's been the standout because the manufacturing sector in the Midwest has been so strong. If you looked inside of that, the last release, which disappointed, future inventories. I don't want to get too wonky here, but future inventories, which basically says my confidence in future demand, swung from a positive position to a negative position to the greatest extent since the survey's ever been done since 1946.
Sounds like you're making the case for a rate cut, though, because you're worried about that. We saw the JOLTS, the Job Opening Labor Turnover Survey. That dropped a couple 100,000 open jobs.
I'm just disputing the Fed's notion that this is the strongest economy that we've ever had.
So
we have layoffs going up in this country. We have for 8 solid months.
But they shouldn't be cutting this year. You don't believe so?
I think they will be cutting this year. I don't think they'll ever fight the markets.
Should they be? I shouldn't eat that second order of biscuits and gravy, but I will.
If they want to get in front of what's coming, then they should be cutting rates this year.
You believe so?
I do.
The market. You got jobless claims at a 50-year low.
That's true, because companies will not let.
A lot of the other data, I can find it. You could say this is bad, and I could say data, this is good.
There's a lot to be said for some of the data that show extreme strength in the U.S. economy. But we know for a fact that the skill shortage means that companies will not let go of their employees. But, on the other hand, look at last year's standout. Look at trucking. Look at the prices for freight. Look at the Cass Freight Index.
Don't you worry about overheating
4 months
this
in a
thing
row
and just spiking inflation?
Well, that's the problem. You've got the Chinese. They pumped $792 billion. Think about that. $83 billion in one day in January. But for the quarter, almost $800 billion of stimulus. Of course you're going to jack up exports. I mean, look, the way the Chinese government implements monetary policy is they give lenders offers they can't refuse.
It's the iron hand, not the velvet glove.
They're like, lend,
right?
And lend now, and lend to them.
Lend to anybody. Yeah.
No, well, no, it was targeted small, medium-sized enterprises that were starved for capital.
What I'm saying is they're not exactly choosy.
No,
and selective in who might get the money, right? They just want to stimulate.
The banks said we're going to lose money on these loans, and the government said, and?
But how do we respond to that massive China stimulus, if at all? Is there a response?
Well, if you combine the Powell pivot with the Chinese stimulus and the fact that the Powell pivot unfroze balance sheets, right? We had 41 days when the junk bond market was shut down, which scared the heck out of Jay Powell. He understands the credit markets.
That was the pivot where he went from an eagle to a pigeon.
Exactly.
I just changed the birds.
I like that.
Yeah, you're welcome. You can use that in Quill Intelligence.
Sky rats. I didn't say that. But the combination opened up the coffers again. CFOs said, who cares about the balance sheet and GE their debt being downgraded and the credit market freeze? Once the credit markets open back up, buybacks. So if you combine the record buybacks we've had in the United States in the first quarter and the Chinese stimulus, you pump $1 trillion into the economy, you're going to get a reaction.
You worked at the Dallas Fed, a fourth GOP senator saying they're not going to support. We're calling it the Kane mutiny.
But Kane has.
Is that the right move? Should he be on the Fed?
He's not going to be. We don't have to talk about this anymore. He's stepped back from the process, and rightly so. I think he actually made an interesting political maneuver because I think that the Trump administration put the two individuals up so that they could get one. I think they never wanted Kane. I think they always wanted more, and I think that the Senate was not going to turn down two candidates.
So who should be on the Fed?
Who should be on the Fed?
I mean, if there's no Kane and maybe no more, what do we do? Who's a good you?
No,
raising your hand?
That would not be popular. No.
We don't need popular. We need good. Who would you fill in the Fed?
You need somebody.
Can you name somebody that you would put on the Fed right now.
Well, Rich Clarida would have been a good choice, and there he is. But now we find out that he is as dovish as they come. And that's the thing. You have to find, the reason that Kane wasn't such a terrible choice is because he knows what a payroll is. You have to, you have to find somebody who's been in the real world, who understands how Fed policy directly affects little people. It's not just Wall Street.